Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is breaking out from a monthly range. In fact, what we can notice is that we had the bottom of the range here acting as a historical level of support and demand. Then at the same time, we had the level here at the top acting as the resistance for this market, which again was respected all across this zone, essentially for more than 1 year. And during this year, the market has been ranging in between these two levels. However, what we can notice right now is that we just had the breakout above the high of this range. In fact, this green candle was the first candle breaking and closing above this zone. So now all this previous resistance is turned support. And we can see how already the market, after breaking it to the upside, has retested the level and is currently already rejecting it to the upside, which is exactly what you would naturally expect in the case of a break of a historical structured zone. In fact, if you have in the market a level which is acting as resistance in multiple occasions, so the market is respecting the level as resistance, and then the market breaks above that zone, after the break, all that previous resistance becomes support. So after a break, on the retest of the previous resistance turns support, that is where there is an increased probability of seeing a potential rejection to the upside away from the level. So that is exactly what so far the market has been doing here in the monthly time frame, behaving exactly as you would naturally expect in this kind of situation for this pair. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice how the market is currently testing previous weekly resistance from which this push to the downside was created, which the market then broke to the upside. So at that point, that previous resistance was turned support. And at the moment, the market is testing this previous resistance turned support zone with an increased probability of seeing a potential rejection to the upside away from this level. We can also notice that from a pattern standpoint, we have a very clear impulse to the upside followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly at this area, which is also previous resistance turn support, creating a confluence of support at this level. And when there is a confluence of support zone, there is an increased probability of seeing institutional longing, which at that point could further increase the probabilities of seeing a potential rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, what we can notice is that we just had a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure a correction, you have to take your Fibonacci from the low to the high of the impulse leg. And again, also here, we can notice how we have the 50% and 0.618 lining up perfectly with this previous resistance turn support. Therefore, again, creating a confluence of support in this zone, which increases the probability of seeing institutional longing inside of this area, which again could further increase the probabilities of a potential push higher away from this confluence of support area. We can also notice that, by the way, just a few days ago, I spoke about USDCAD when the market was around this area, and I explained all the reasons for which we could expect this correction to the downside. And by the way, I will link that previous analysis in the description, so you can go and check it out for more free education. But before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders So what the big players in the market are doing precisely on the CAD. Now, if we look closely here, we can notice how with the last reports, we went from having minus 65.5k net positions all the way down to having minus 182.3k net positions, showing how institutions have been moving back to the bearish side for the CAD, therefore making the CAD weaker. And a weakening CAD makes USDCAD stronger. So we can notice how 2,300 shorts added with the last report on the CAD and 4,800 longs getting closed on the CAD from an institutional perspective means that institutions by shorting the CAD and closing their longs on the CAD are essentially longing their shorts on USDCAD, which makes obviously the CAD weaker and USDCAD stronger, therefore increases the probability from here of seeing a potential rejection to the upside, because as we were saying, since this area is confluence of support, there is an increased probability of seeing even more institutional longing instead of this zone, since already we have seen this institutional longing, which could further increase the probabilities of a potential push higher away from this level. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, these are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction, impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.